Welcome to Adding Dollars. In this video, I'll be going over my weekly update on the highest volatility stocks, so stocks that are paying the highest premiums for covered calls and cash secured puts. Before jumping into this week's scan, if you're new to cash secured puts and covered calls, make sure to check out the links in the description. Now let's go ahead and jump into this week's high volatility scan. As always, I'm in the Thinkorswim platform and I am going to be on the scan tab and I'm going to be scanning the S&P 500. So let me go ahead and switch to that list. If you want to see me scan a different list of stocks, feel free to leave that down below in the comments. Here we have a list of all of the stocks in the S&P 500 sorted by highest implied volatility at the top and then descending from there. Looks like we have Supermicrocomputer at the top with an implied volatility of about 69%. We're going to go ahead and skip this one for now since we have looked at it in the past couple weeks. Let's go ahead and look at one that we haven't looked at yet. Vistra Energy Corp, currently trading at about $86 and currently has an implied volatility of around 57%, almost 58%. We can jump over to the trade tab and see what kind of premiums it's currently paying out. I'm going to be looking at the 8 days out options, so options expiring the following Friday. And as always, this is after hours data, so some of this may change when this video comes out or when the market opens. I also have this custom column on my trading platform called Percentage Premium that quickly calculates the percentage profit for selling a specific cash secured put at a certain strike price. And it also gives you an estimate on the percentage profit for covered calls as well. If you're interested in adding this to your own platform, check out the link in the description that has free instructions on how to add this. Now let's go ahead and start with cash secured puts. It looks like you can make about 1% selling the $79 cash secured put, which means you would collect about the midway point between these two values in premium, so somewhere in between $65 and $90 for selling one cash secured put. The risk here is if you did end up getting assigned, you would need 79 times 100 because each option contract equals 100 shares. So you would need $7,900 in order to purchase 100 shares of the stock if you did end up getting assigned. On the covered call side, it looks like you could purchase 100 shares right now for about $8,626. And then go ahead and sell the $87 call options and collect about $260 or $270 in premium, or about 3.17% in about 7 or 8 days. Jumping back to the scan tab, let's go ahead and look at a couple more. Let's go ahead and look at Tesla. I feel like it's been in the news quite a bit and we haven't looked at it in a while. Currently trading at about $177 with an implied volatility of about 54%. Let's go ahead and jump back to the trade tab and take a look at Tesla. Again, looking at the 7 days out options and starting with cash secured puts, looks like you can make about 1.07% selling the 167.5 cash secured put, which means you would collect some premium in between $177 and $182 for selling that. But your risk here is if you did end up getting assigned, you would need $16,750 in order to purchase the 100 shares. On the covered call side, you could buy 100 shares right now for $17,794. And then you could go ahead and sell the $180 call options and collect about $470 to $475, or about 2.64% in 7 or 8 days. Jumping back to the scan tab, let's go ahead and look at Broadcom. I don't think it's one we've looked at before. Looks like it has earnings coming up on June 12th. Currently trading at about $1,401 and has an implied volatility of about 41%. Much more expensive stock than the other two. We can jump over to the trade tab and look at the kind of premiums it's currently paying out. It looks like you could make about 1% selling the 1,305 cash secured put, which means you would collect somewhere between $1,200 and $1,400 in premium. The risk here is if you did end up getting assigned, you would need about $130,500 in order to purchase 100 shares because this is a much more expensive stock. On the covered call side, you can currently buy 100 shares for about $140,127. And then you could go ahead and sell the $1,402.50 call option, which means you would collect between $4,730 and $5,000, or about 3.48%. This is a much more expensive stock, so it's going to cost a lot more money to buy 100 shares, or if you did get assigned on cash secured puts, it would cost a lot more to be able to purchase those shares when you get assigned. Jumping back to the scan tab, feel free to pause the video and take a look at the full list of S&P 500 stocks sorted by highest implied volatility at the top and then descending from there. And if you have any questions or comments, feel free to leave those down below. And if you want to help support the channel, don't forget to like and subscribe, and I'll see you all in the next one.